Let's see how it plays out.
I mean, inches away is exactly right. 2.5% away is what the distance was as of Friday's close on a new all-time high. So it could happen in a day, 2 days. But is this going to be that week, a 4-day week? We'll see. Let me just quickly outline a couple of factors. So the big news, as I said, was that China isn't reopening anytime soon. Why is this important? It's important because, you have commodities. I mean, metals, for example, the metals index last week, Friday to Friday, was up, I think, about some 7%, 8%. So metals have seen this very huge rally. Copper prices, for example, on Friday saw a very large move. What happens to China matters for metals more than any other singular factor. There's lots of things which go into the mix, but China is a big driver. So that is point number one. The other kind of broader overlay is that it's the same, which is China is the largest weighted emerging market. And if money isn't going to China, and we've heard from large funds like Tiger Global, etc., and we discussed this on Friday afternoon, that they're not going to put more money into China. Where does the money go into? It goes into other large emerging markets like India, like Taiwan, and others as well. So that's the bigger macro overlay. I mean, it's not as if they're going to remain shut forever, but the expectation was that something is coming very soon, which is not going to happen. By the way, the Hang Seng opened lower, but it's higher right now. Chinese mainland markets like Shanghai Composite Shenzhen, they are lower by about 0.5%. I mean, nothing large. Maybe things will be okay. The dollar index, there is one big positive and one negative. The dollar index lost 2% on Friday. It's the largest one-day fall since December 2015. And it's interesting, right? The price action, it could be because of positioning getting squeezed out, etc. But the fact is, we heard once again from the Fed chair last week in a very hawkish manner. And on Friday, last day of the week, and the jobs data, for example, on Friday was not dovish or anything, but you had the dollar index which fell. So prices are going in a definite certain direction, which is positive. I mean, you want the dollar lower, not higher, and that, I think, takes a lot of pressure off emerging markets. Brent prices, though, went up 4%. They've pulled back a little bit. They were almost 99 point something. They're closer to 98 now. But that bears watching. On Tuesday in the US, you've got the midterm polls. Midterm elections, and most polls indicated a divided House. So no real party, the Democrats or the Republicans emerge as winners. That's what the polls suggest. Big data point, really. I mean, the polls will be important and there'll be a lot of noise around it. But the big data point out of the US is inflation numbers. That's only on Thursday. Month on month, core inflation in the US is seen up about 0.5%. So we'll see. And that could be a big one in deciding whether in December the Fed does 50 or 75. Just a couple of levels. The Nifty swing high of 18,179 is the first and near-term hurdle. SGX is indicating we'll jump over it right at open. The next target in the Nifty is 18,300, which is around where the SGX is indicating a start. The Bank Nifty has 41,677 as the first level to take out. So that is, again, about, 400 points away from where we closed on Friday. And the Bank Nifty's recent low at 40,819 should act as a decent support. You're going to start higher. I mean, if you're a bull and if you've watched price action recently, you'd kind of hope that the market doesn't open that strong. It opens a little weak and gives you the opportunity to get in, or maybe even mid-session if there is a pullback. But I think the initiative is very clearly with the bulls. And this morning, 0.5% higher indicative opening on the SGX Nifty futures. Nigel, what are you watching?
Well, given the fact that the SGX